Greetings from Nabo Capital. My name is Njoroge and we're continuing with this series of Treasury Solution, where the content that we're bringing is about how can you generate passive income line from your business. What will passive income do for you? It will not only help you to build your wealth as a business, but it will help you to optimize your cash flows, generate an additional business line, which is called the investment income line, and thereby providing financial security and stability for your business. In this series, our CIO will be unpacking the investment art of how we execute a treasury solution. Tune in, log in, continue to watch this content. If you like to receive our newsletter, email invest@nabocapital.com. Thank you for joining.
So there wasn't anything in terms of investment philosophy or strategy that really said, oh, we're going to short Uganda. It was just that, it didn't sit well with a fungible, admittedly ethical framework.
Correct. Which also had a cascading effect on the yields of those particular investments.
Yes.
So the timing was right from an exit perspective. And these are some of the things that we're saying we look at. We not only look at what is happening macro, but we also invest ethically. That is part of our philosophy. That's part of our strategy, that we want to put our money and our clients' money where there is alignment of value and there's alignment of goals.
Yes.
You authored an amazing read on the 2024 Macroeconomic Views, highlighting where we think and foresee the Kenyan economy to go. And in that paper, if I may just paraphrase, you said that whilst the soft landing was clearly not orchestrated, the evidence of monetary decoupling is overwhelming. We're optimistic that inflation can be reined in by applying central bank's bread and butter combo, increasing the risk-free rate, which you spoke about. Then here you say that you estimate that in the US, the terminal rates and also in Kenya will follow suit to the tail end of 2024.
Yes.
We are yet there.
Yeah.
We are close to H1 of 2024, and we've seen Q1 has been far beyond what we could imagine. There's been some positive traction from the strengthening of the local currency, the repayment of the Eurobond, which was a fantastic move, strategic move by the government, and has given a lot of investor confidence. And we're seeing that also cascading to our equities, the NSE.
Yeah.
Where do you foresee H2 to go to? And feel free to just flow from a treasury perspective and not, of course, this is not a recommendation. No. We advise everyone to do their own due diligence. We're just having a conversation here.
Yeah. Well, yeah, I think you hit the nail on the head. Folks need to do their own due diligence. What we saw looking into the tea leaves in the beginning of the year was that we were seeing signs of monetary decoupling. It looked like advanced economies have done a better job of reining in inflation versus emerging economies. And that really meant that the Federal Reserve, perhaps other large central banks, might risk overshooting the runway, and that's never a good idea. So at the time I saw strong evidence that we should enter a period of easing through 2024, first followed by advanced economies and then followed by the Kenyan economies and other emerging markets. Of course, a lot's happened since then. The successful issue of the recent Eurobond has relieved certain inflationary pressure from Kenya. So that might mean that the risk-free rate in Kenya might have cut back earlier than we anticipated, which is the H2 of 2024. But yeah, I think so far we haven't found any evidence to really dramatically break away from those recommendations. One thing I would add is that, and this is a general statement just across the globe, whether you're in one of those countries that are still catching up with inflation, or you're in a country like Kenya where we might have actually caught up with inflation, or when you're in the US where they've clearly caught up with inflation, this is a limited time opportunity to lock in these rates. I think I've seen GOK bonds over 18%. It's a crazy number. And being able to buy those securities at those coupons, at those rates and yields, I think is the definition of a closing window. I estimate optimistically that investors who want to get those rates, lock them in for the next 2 to 5 years at the upper max, they have a maybe 2 to 3 month window in order to do so. Based on what we saw at the time. And, yeah.
And also based on what we're seeing with the most recent issuance of the GOK bond that was turned back because of high interest rates, the higher coupon rate.
Yes.
Yeah. So I think in a summary, what we're saying is we're beginning to see the high interest rate environment tapering off. As a CFO or a CEO of your organization, 2 questions to you. Have you built a cash war chest? 2, do you have an investment income line in your P&L? These are some of the insights that we brought to you so that we can not only educate but also show the possibility of the benefits of diversifying your income streams as opposed to relying on the active income of your business. Generating a passive income line is what we help our clients to do and what we've been doing for the last over 50 years through our heritage, but most actively over the last 13 years at Nabo. And also successfully last week we had Pius Moshiri, our CEO, sharing Nabo's testimonial of Nabo's Treasury book, which really helps to cater for some of the operating expenses. Feel free to reach out to us. Let us know some of the questions that you might have. We're going to be sharing our contact details herein. But in a parting shot, Damitha, maybe any 1, 2, 3 things that came out from a Treasury solution perspective that you'd like to share with our audience?
Yes. Just the 3 would be always to look for a partner who can give you a bespoke solution. Off-the-shelf stuff works, but when it's something as important as your cash flows, a bespoke solution should be at the top of your list. 2, be candid about your risk appetite and what your future cash flows might look like. That really helps in central planning. And then finally, this is what we call a fluid macroeconomic environment. So whatever you do and whatever the choices you make, approach them with an overabundance of caution. I think I labeled this year's outlook the best worst case scenario. That's not a ringing endorsement, right? I think the key takeaway is that this is one of those years where you really see investment professionals really add value. So those would be the 3 things. Know your cash flows, create a bespoke solution, and then really do the due diligence.
Great, thank you.
All right.
Thank you so much, Damitha. Thank you this was like a masterclass.
Thank you.
In terms of unpacking investments, risk, Treasury solution. Thank you for your insights. You've had it from the expert, our CIO, Damitha Pathmalal. And at Nabo, we continue with our ethos, investing with purpose. So we tailor these solutions, make them bespoke to meet your needs, to help you to achieve your goals, generate that passive income line. Thank you for joining us.
I hope this has been an amazing conversation, life-changing conversation to be precise. And I hope that this message gets to as many CEOs, CFOs, general managers, and business leaders out there. And for me, there is only one challenge that I want to throw to all of you who are listening my voice. How much investment income do you have amongst your revenues? What is the percentage of investment income contribution to your revenues? And I would say this, every business needs an investment income line. So I want to say, if you feel this speaks to you, please reach out to us at Nabo Capital. We will be more than happy to sit down with you to explore all the options, all scenarios, and come up with a plan of how we can optimize your investment income line. We can introduce an investment income line to be one of the contributors to your revenues and insulate your business from the turbulent times that we live in. Thank you very much for listening to me. I look forward to engaging you further after this conversation. Thank you, and God bless all of you.